All right. Good morning. Can everybody hear me and see my screen? Just want to make sure we're all good out there. I think we are, but I always like to get that confirmation. Happy Hump Day, everybody. My name is Jacob Gabbard from Invest with Jacob. This is our weekly live stream where we demonstrate our indicator and talk about trading and show you good, solid trades, win or lose, and why they're good, solid trades. A lot of people will give you trades and not tell you about them or not tell you why we're entering them or what's going on. We do the opposite. We give you trades and give you very in-depth coverage of why those trades are important, how to manage them, and what a good trade looks like. And yes, good trades can be losing trades. So the purpose of these lives is mostly to demonstrate our indicator, which is seen on the screen here. You can see the buys and sells on the screen. We don't trade after hours. We're in the after hours still until 9:30 when the market opens. So none of these sell or buy signals are valid. They are mostly low degree choppy trades with low volume. We built our indicator based on several important factors, one of them being key levels, one major one being volume at key levels, which is how we identify what lows are more important than others. And the indicator understands where reversals happen based on about 170 metrics. It's a little more than that, but and it looks at them in real time and it's forward looking. So it's not looking for like things in the past to happen, like an RSI move into a certain level or a moving average cross or something like that. It's looking at real time levels, looking for real time reversals. Even in the after hours, you can see it nailed the low here. The buy is on the bottom candle of the after hours, or what we would call the pre-market low. Um, and that's really important to establish those kind of entries so that you can get the move. What we are looking here is a classic failed breakdown setup. We've been talking about this a lot in my room, and that failed breakdown setup is a very powerful entry. So what you have on a failed breakdown setup here, just real quick, I'll go through it for you guys. I go through this almost every day in my room, so cover it. But you had the low here at the close at 676.58. You can see on the left side of the screen. In the after hours, they came down below it. So they do what we call sweeping the low. Then they got back above that low, right? And then they got below the low, but couldn't take out the overall low. So this is a higher low. And as they come back to that price, that tells you that price is comfortable here. Price got here, they rejected it down. There was not enough supply here to take out the low. And then they came back up to this key level, and that would take them to the next key level. Now, the only requirement of a failed breakdown is that it retraces to the previous resistance level, which at this time was 677.20. It did that, and then it got through that. And once it gets through that, it retraces to the next one, which was 678.07, and then up to the after hours high, which they're making right now. I'm sorry, no, and back to the after hours high right here. Sorry, that was our next resistance, 678.80. The pre-market high was up here at 680. So classic failed breakdown, rip it back up in the other direction. You get in right when it crosses this level again, so the pre-market low. So your entry after they broke down through the pre-market low, or this low right here, excuse me, was when they came back to that low. That's when you enter. So you would have entered at about 676.60. And right now you'd be at 679.90. So a 3-point move straight up, pretty darn good, if you ask me. So that's called a failed breakdown trade. That's a classic signal. We got, the low from the indicator plus that is a very strong signal, and they're going to go up and test this pre-market high. Overall, the indicator is an algorithm. It is based on, like I said, a little over 170 inputs. Those inputs are very important. It understands where highs and lows materialize and tries to give you the best entry for those. And as close to the tops and bottoms as possible. Does it always nail the tops and bottoms? Obviously not. Nothing does, but it gets you in really close. And over the last 2 years, it's made us over $120,000 based off of a $100,000 account. So over 2 years, we've made over 100% on our money, and 120% on our money actually is what it is. So 120% return in 2 years, very, very strong algorithm if you follow the simple rules. Now, the rules are really simple. We don't trade the after hours trading. Right now is after hours, so we don't trade, right? We don't trade on trend days. Trend days are defined by breaking either the high overnight high, which in this case is 680, and breaking it during regular trading hours. They're going to probably get to it right now. We'll see if they break it. But breaking that during regular trading hours, so you want to see them break over it, back test one of these three moving averages down here. One is VWAP, one is the 8 EMA, and one is the 21 EMA. Back testing and then getting back over what high they made. As soon as they break this high, that would be a trend day up, and down would be below the pre-market low or overnight low, back toward one of those trend lines, and then back down to break that low. If they do that, that constitutes a trend day down. So we don't trade on trend days. Once that happens, we go take a walk, we exercise, we play with our kids, we eat a nice meal, or do something else. We don't trade. It's just not conducive to trading. Even if they reverse, many times it's choppy. Most of the time, if you're chasing the reversal, you're going to get drilled 3 or 4 times before you do. It's not good trading. I tell people all the time, if you walk into a poker room and you see 2 tables, and one table has Phil Ivey, Phil Hellmuth, Daniel Negreanu, Doug Polk, and whoever sitting at it, and the other table has 5 drunk guys with a ton of chips who don't look like they know what they're doing, do you want to sit with the superstar poker players and have all your money taken? Or do you want to sit with the idiots and make money and have a whole lot better chance of crushing the game? I would hope you want to sit with the idiots who are drunk and have tons of money to give up, because that's where your odds are best. That's where things are going to happen the way they're supposed to happen more often than not. And trading is just a game of probabilities. So we want to put ourselves in the best or the most probable situation to win. On trend days, that's like sitting down with superstar poker players. You're not putting yourself in a position to win. So we don't trade them. It's okay to not trade. You're not going to get rich in a day or overnight. Stop trying to do that. If you're trying to do that, you're going to be broke in a day and broke overnight. Even if you hit a trade or two, you're going to get it taken back. Trading is very, very much like drugs, especially heroin. Not that I've done heroin. I just know the stories. Your first hit is magic. So your first winning trade, especially if you go for a big one and you happen to hit for $10,000 or something and you only have like a $10,000 account. Believe me, I've done it. I've been there. I've walked in those shoes. It's a big dopamine hit. It is really neat when you double your account overnight. It's also like a drug that makes you chase terrible trades constantly. Get out of that mindset. Understand that $400 a day is $100K a year. So if you're trading, we trade 50 contracts. So 8 cents a day is $400 a day. 8 cents. That means on a $1 option, if we trade 50 contracts and it goes up to $1.08, we made $400 that day. If we did that every day, that's $100,000 a year. And that's still really hard to do. In 2 years, we've made $120,000. Okay? So you have to understand that losing is part of trading, mindset is part of trading, and there are rules you need to follow to put yourself in the best possible spot to win or to make money. Morning Inner Wave Flow, welcome to the stream. Good morning, Johnny Recently, welcome to the stream. Morning Ponzi Zombie Killer, welcome to the stream. Real quick, before we've got about 15 minutes, I'm going to jump over and out of the trading mantra I was just in. I gave you most. Oh, we have one more rule: 3 strikes and you're out. If we're having a day and the market's just choppy and you get 3 losing trades in a row, you're just done trading for that day. You don't need to trade with a bad mindset. You don't need to trade a choppy market. It's okay to miss moves. It's okay to miss trades. Again, put yourself in the best possible position to win, and you will do much better. Trade sizing that matters. Take small wins and scale in and out, or scale out. Have stops. Do all of the things that you need to do. And I promise, if you do that for 1 year, if you follow the rules for 1 year, you will not believe the amount of money you have at the end of that year. It's incredible. It'll change your life. And if you do it for 5 years, you can do what I do and just sit down and trade all the time. So at any rate, let's jump into the charts real quick, because I guess a lot has happened since last week. People are all worried that the market's down, but it's a couple percent down. It's just a standard pullback. Huge support down here at 67.84. This can be a B wave. So the most bullish scenario right now is that all of this move up was A. And remember, we are in a large ending diagonal, very large, since October of 2022. So each wave will take shape as 3 wave forms, A, B's, and C's, instead of impulsive and corrective. So every wave will be in a corrective form. So we have an A wave up. This is if this is going to be bullish. If this is not, the top is in. I don't know that the top is in personally. I still think 7,000 SPX is a very round, big number, but they did get within 15 points of it. So we'll see how that goes. In my last video, I did say 7,000 was a huge number and likely to reject very strongly. We are seeing that. I just thought they would tag 7,000 first, maybe even push through it, but they ran the opposite. So they can run 3 traps. So before I get back into this, they can run 3. Well, 2 are a trap and 1 is you're welcome. So most people are looking for a level. Let's say this line is that level. And they're looking for price to come to that level. So the first trap they can run is above the level, get the bulls excited that they broke through resistance and that they're going to go, and on the back test, fail, right? And do this. And then the bulls get stopped out. The shorts who wanted to short here get stopped out on the spike through. Everybody loses except the institutions, right? The second trap they can run is they come up to the line and they come up short of the line, screwing everybody that wanted to take profit at the line right here, or anybody that wanted to short at that line like we did. We wanted to short at 7,000. They came up short of 7,000 and then they shorted. Okay. The third trap is what I would just call a you're welcome. It's not a trap at all. They come to the line, they hit the line, they reject the line almost exactly or exactly, and then they do this and everybody wins. The guys who were long, who wanted to take profit win. The guys who wanted to short win. They give you that sometimes too because they got to keep you off balance, right? So they can run all kinds of traps. That one happened to be, or the one they just ran happened to be coming up short of 7,000 SPX by 15 points and then ripping it down pretty strongly. Now, I'm still of the opinion this will get bought back up. So if that's the case and we're in this bullish scenario, again, that up is A, this move down would be B, and then we'd look for C higher from there. As far as levels for B, we're looking at 6750 and 6780 as levels. 6800 is a very powerful level as well. So anywhere from the 50% to the 764, all really good. But the 50% is sitting on this support right here, so a very nice level. The 618 is just below that support, and on this, there's support here as well at that 6750 zone. And then the 764, excuse me, is down on this inverted head and shoulders they kind of put together over here where they had this and this. So all 3 really nice levels. We'll just have to see how they react off of them. So right now, I would be looking at this as a B wave and then C higher. Now, if that's the case, I was thinking 7,000 was a possible end target, but if it's the case that this is B down, the C leg higher would target about 7,200 on the ES, which would be roughly 7,150 on the SPX, and that would target much higher. Now on the NQ, you have a very different setup because the NQ is very weak, where the ES made a low and had enough demand off of that low to go make a new high. NQ made a higher low, and then didn't have enough demand here to even take out this high, let alone this high, whereas ES made this move and went to the new high. So off of this low, ES was able to take it all the way to new highs. NQ couldn't even get it back above the first initial push. That's very, very weak. So can they be in an A, B, C as well? Yes. Their B leg targets would be basically 24.9 to 24.6. Very, very big targets. 24.9 sitting right on this support that they're almost at, and 24.6 sitting on this double bottom here, or well, this side bottom and side bottom and head in between. So not a true inverted head and shoulders, by the way, just telling you that the kind of look it has. So that's what you're looking at on the NASDAQ. Now, if they break down below those levels and get into the November lows, if they hold that low, we can count that as a potential bigger wave 4. If they break that low, then we can start talking about potentially different things happening in the market and the top potentially being in. Now on the NASDAQ, I think the top has a much better shot of being in than the ES. It's got a clean high here. It's been very weak on the back side of it. It doesn't have a very bullish structure off of this low. So the NASDAQ is much more of a candidate for the high to already be in than the ES, in my opinion. So I do see a world where we can rally back to over 7,000 on the ES, and the NASDAQ comes up to 26.4 or so and then turns down. All right, we've got about 10 minutes left. We can go back over to the SPY and get ourselves set up. We are in a buy right now that they've taken up pretty well, setting the pre-market high. Now we will see if we're going to get a sell into the open. And if we do, I actually think today could be a pretty strong bounce day. So, we were down 150 or something yesterday, and I think today we could be up a fair amount. So be careful. The snapback is always strong and real. But that would be my hypothesis for today, is that we see a bounce day. We had a really nice 4 or 5 of C here, where they bounced it up yesterday and then sold it off into the close. They've kind of set the low overnight, and they're back above the middle of the night high. So that's very bullish, especially as we go into the open, and they're getting back into these levels here, which is going to create a failed breakdown of this level. So they, this level's right now the failed breakdown that they're going after at 679.18. They've already done that. You can see they got through it, came back to it, and now they're ripping again higher. So that is a failed breakdown of this one now, which takes us into, they've already hit the target, which was 680.93. So now they're into this. If they can fail through or run through that, or give you another failed breakdown of that, we would look to 682 and then potentially up to the 684 zone. Where's our 1-day max for today? Okay, so 684. This high from yesterday is going to be a tough level to get through. If you're wondering what these are called Mentor Q levels. You can see on my screen it says Mentor Q Gamma over here. This is a paid service, but it's a phenomenal service. It tells you each day where the 1-day minimum and maximum are, and we treat those like the shoreline. So we know where the tides come to in the oceans, so we can build houses on the oceans, right? We know that the water's not going to come up into those houses. So treat this like a shoreline, like it's going to contain price almost all the time. However, just like on the ocean and just like on the shoreline, there are hurricanes. Hurricanes blow through the shoreline into the houses and keep going. There are days where these don't hold, and the market crushes through them up or down. Those are called hurricane days to me, because the 1-day max didn't do its job for a minute or for a day, or the 1-day minimum. The 1-day minimum today, by the way, pretty low down here at 670. So we'll see how today resolves, but I think we're on schedule for a bullish day back up towards the 685 area, and then we'll see what we get from there. That's 6,900 essentially on the ES, and 69.10, 69.13 is the level that has to be retaken for the bulls. If they take over that level, the bulls are likely to run this back up. If they fail at 69.13 and turn down strongly, then we could have another leg lower. Question regarding levels. Table says for ES 6810, current sell pause. I don't know what you mean by that, I'll be honest. Table says ES current sell pause at this level. I assume you mean comes from previous price action or the night drop. Ponzi Zombie Killer, no problem. Oh, 6810, that's just the low, so they paused overnight at 60. Let's go to ES. Got one 5-minute bar, so we have to be quick. They paused overnight at 6810 is a big level. They paused overnight at 6814. It's going to be prior price action if we go back. If I can get the chart to load, we'll see. Moving slow right now on Trading View. The chart's loaded. It's just further back. I see. I believe that was the low. We go to a bigger chart. Hold on. From right around the new year, I think. Oh, okay. So yeah, 6810 is so it's approximating. That's coming from the Invest with Jacob AI, the AI that I created for that you guys will be trying out soon. So that AI can't see every single number on the chart, so it sees 6800 and 6820 and sees this line and approximates 6810. It was actually like 6814. It looks like. So I think that's an approximation because when you load the chart into the engine, if you don't have it spread, I have it so it can see further back. And if you don't have these numbers spread out far enough, it doesn't know the exact number on the chart. So I'm thinking that's an approximation. I could be wrong about that, but I'm pretty sure that that's the case. Just arrived. We looking for a buy or a sell? We are looking for a sell, Will. But I can tell you, watch for traps on these sells. I do think today could be a very strong trend higher, back to 685 or so on the SPY. And I do think, again, that this will get bought in general. They can still go lower. I'm not saying today is the day we break the bear drop and go higher. I do think today there'll be a little bit of a snapback bounce, and then we'll see from there. But 69, until they get over 69.13, this market is in a downtrend and the bears are in control. If they get back above 69.13, the bulls start to take control, and I would look for a pretty strong squeeze above that. Welcome to the stream, Will. Happy to have you. Let's get ourselves set up. We got about 2 minutes to the open. I got to get set up, guys. So let me do that. We'll come back. Okay. So we are looking for a put. 679 is the current. It's going to depend on options prices. Probably 680 will be the 680, 679 will be the current strike. I think 679. 679 is what I'm going to go with. 679 is going to be the strike. Get that set up here. Got 1 minute. Let's get my day trade alerts. It's been robbing us lately. What I mean by that is they've been giving us the sell signal or the buy signal right before the market opens, but it's technically in the pre-market, so we don't take it. And then the market has been ripping in that direction. So like if this was a sell signal, we can't take it. And then they've been following through to the downside or vice versa to the upside. We had a couple of days in a row of that. That's no fun because you miss pretty good trades. But listen, missing trades is... Let me explain two of the probably the most important concepts in trading. Number one, missing trades is not only okay, it's needed. If you don't miss a trade, that means you're trying for every trade and you're getting crushed on too many losing trades. Number two, losing is part of trading. You're going to lose. That is a thing that will happen. Okay, 679 is going to be our price. We haven't gotten sell yet. Coming back to test the 8 here. We're up near the pre-market high. This could turn into a trend day up very quickly, so keep that in mind. January, I'll be honest with you, has been really hard to trade. Most of it has been trend days. We're 21 days into January, and I would say almost half of the days or more have been trend days because of the market's wild moves. And we just haven't gotten to trade a whole bunch of them. And the trades we are getting are bouncy, meaning you're getting a fair amount of stops in there. So January hasn't been the cleanest month to trade, but that's part of trading. The market's always, the reason there's probabilities instead of facts is because everything is based on probability, right? If everything was based on fact, well, we'd all be a billion, we'd all have $1 billion or more because it would be factual. But 90% of the time or 80% of the time, the market acts a certain way where you can expect exact behavior. But the other 20% of the time, it doesn't. And those are the times where losing comes into trading quite often because you're expecting the market to behave a certain way and it's not. And it can do that for a long period of time. It can do that for a month, 2 months. You can see 2 months of tough trading. We saw it in, I think, like August or September and October. I think September was a losing month and October was flat or something. Or no, August and September. August was a losing month. In September, we made like $300. But then in November or October and November, We made 24 and 26,000 respectively for 50,000 in 2 months. So the market's going to snap back to what it's supposed to do, but you're going to go through times of irregularity. And that's where you have to size properly, because you're going to lose several trades in a row, or you're going to have a losing month. You're going to lose more than you win because the market's not behaving the way it does most of the time. And that's okay. That's part of it. Do you want to be the gambler or do you want to be the casino? The casino knows that over time their edge will win out, and that's what builds billion-dollar casinos. They don't make $50, they make billions of dollars because they know that over time they will beat every single person that walks into that casino. You want to be the casino. Over time you want to beat the market. The gambler is trying to put 50,000 on 36 on roulette and hope it hits. The trader is, letting him do that and taking that, booking that bet. Because yeah, he is going to hit 36 sometimes. There's no question. I have to pay that out. But 99% of the time he's not. So, or whatever the math is on that. So you want to be the casino booking the bet and on the right side of the probabilities, not the gambler trying to hit the 1,000,000 to 1 shot, because you're just not going to. You're just throwing away money. If you want to be a billion-dollar casino, trade the way the instructions say of any program, not just mine. Most trading programs out there, if you follow their rules, are really good. Most of them. Or at least good. I wouldn't say really good. Or at least good. But people can't follow the rules, and then they say it doesn't work, and they say you can't predict the market, and it's all fixed and rigged. No, you just can't follow rules. You are fixed and rigged. You have been brainwashed by the market to react a certain way to certain price movements, and then you put your money in. That's the thing. When somebody says the market's rigged, I say kinda. You're kind of brainwashed by the market because you have three factors. You have the guy on TV telling you what to think, then you have the algo pushing your emotions, and then you have the market maker running traps. And those three things combined get you in at the wrong time every time and condition you to do it. Not only do they do it, they brainwash you into thinking it's right. Right? That's why the traps I talk about are so important, because if you've got this black line of support here, and they know that you want to enter here. So what do? They give you a little bit of a win, keep you involved, and then they go down below it, and you're like, oh no, it's going to hold. And then it goes like this, and then you go, oh, it's not holding. So you get out as a loser, and then they do this, and you're like, oh my God, it's going to go long again. They trap all the other longs. They've already trapped the shorts down here. Now they're trapping the longs again, and then they do this. That's how traps work and why they have them, because they know they can manipulate you emotionally over and over again, which is why you have to trade with an algorithm or like a robot. Almost no institution lets somebody control their money anymore because emotion is involved. There might be some guys out there who trade, at least in the short term kind of trades. We're not talking about long term buy and hold stuff like, hey, I want to buy Apple now and hold it for 10 years. I'm talking about swing trading and day trading type stuff. No institution will let humans control that. And that's because humans can't control their emotions. You are manipulated every single day that you trade if you're not trading with an algorithm. Or trading with a rule set and we're using an algorithm and a rule set, because you kind of have to have both, because no algorithm is perfect either. An algorithm and a rule set, you have to follow those rules or you will get crushed every time without exception. Okay. So far, we've gotten a slow grind down, no sell signal yet. Let me go look at the back end. It's me talking all the time right now is all we're getting. So you have an ADD that's extremely green. It is positive 1490 right now, but fading a little. It was positive 1578, so it's down a little. ES is the holdup. NQ is actually already in a sell, and ES is not on board. We've been seeing this a lot. NQ's been leading a lot lately. So we need ES to get to a sell mode, and we'll see a sell signal here shortly. A assuming they can do it in the next bar or so. That's nothing worse than being at the casino with no money. I usually lose it all in 20 minutes. Been there, Will. Been there. George, welcome to the stream. Hello. So this shelf that they broke down right here, they got up into it, they rejected it, back down to the 8 EMA. If they come back to this shelf, they got to get above it at 681.46. That will likely ignite another squeeze up into the 683.13 region, just so you're aware. Right now, price got there and rejected. So the first rejection tells you they don't want price there. Then you have to watch how much rejection is involved. If they can reject it all the way back down, then that was a huge supply zone. If they can only reject it down a little and price comes back to it, that tells you that price not only wants to be there, it wants to be through there. Now, does that mean when price gets back there, it's going to squeeze directly higher? No, it means that as long as they hold this, let's see, it came up to it here. So as long as they hold this low right here, they can run traps back into this like this before they go, but it's very likely they're going to want to do this. And now that they're back up into price, oops, back over here. Yeah, they just got back to the bottom there and are back up into it. So rejecting that area again, technically as long as this low down here holds, because that's the last low that we saw. We saw them make. As long as that low holds, they're good, but you really want them to hold this low. And it depends on how this candle did it. I think this candle might have come down first. So 678.79 is the low I'd use. But again, they can run traps back down into here like they just did. They just pulled back a little bit, and now they're pushing back higher. But you would expect them to break out over that area now because price wants to be there. Price has proven it wants to be up there. That's called price acceptance, by the way, if you were wondering. Again, they got to get over the top of this. So that's 681.50 when they get over the top of that, and they're likely on their way to 682.82 and then 683.20. So they create a resistance zone with a shelf here. It's not a great one. It's a fairly small shelf, but just as an FYI on those types of things. So in this case, your entry, should they get there, 681.47. Your first target would be 682.82. And your next target would be at 683.20. And then the highs after that, or yesterday's highs. If you decide to talk gold, blow off top on gold and GDX ahead of mineral miners earnings. Possible. I've been looking for, oh shoot, we got to sell, guys. Sorry, I was bull crapping. Let me get in here. Okay, I got in at 198, 679 strike, and my stop is going to be 679.75. So now we have basically 20 cents here that we need to go up in price, not up on the chart, up in option price. So we got in $1.98. If we were able to get to 218, we would move our stop down 25 cents or cut it in half essentially. And then if we move another 10 cents to 228, we would look to move it to break even. And then at 40 cents, we would take profit. Unfortunately, guys, I wasn't paying attention. You probably could have got in this trade at 175 or so. So this is not a great entry for me. This was my fault for bullcrapping and reading the chat instead of watching the market. At 175, we could have moved our stop and done better, but that is my fault. Hopefully you guys got in earlier. If you saw it earlier, doing too many things. It's some days it's hard to run the. We stopped out, by the way. Stop at 163. We should have done better on that trade. That was my fault. That was my fault. Execution error. See, that's why humans don't control trading. Algos do, because humans aren't paying attention sometimes. They get emotional. They chase. They interlate. They do all kinds of dumb things. That was execution error by me. Sometimes when I'm doing these live streams and trading and running a chat room and answering questions, it is a lot, and I get distracted. And I have ADD, so ADHD actually. So my mind, once it's focused on something, forgets to look back at other things. If we get that stop or that sell again, we'll give it one more shot. The problem is they're setting up that failed zone that I told you about above. I believe they're setting that up for a rip higher. So we'll see how it goes here. If we get the sell, we'll give them one more bullet here because we trust the algorithm and we do what's supposed to be done. But this is setting up to me to look higher. These look like traps. Set an alarm when the alert triggers. Yeah, I guess I could do that. I'm usually watching, so I've never done that. I guess I could set an alarm. Good point, Will. There you go. I think I have an alert now. We'll see if it works. I've never used them. I've literally never used alerts. I have them. I put them in my algorithm for everybody, but I never use them because if I'm trading, I'm usually watching the chart. So I'll see how it works. I hope it makes a noise, an audible noise. For you guys that don't know, I'm in the process of building the Invest with Jacob AI, and it's pretty incredible. So you can put ES and NQ charts in it, and through my methodology and everything, it will give you a complete detailed breakdown, any chart you want to put in there, of what the key levels are, what the pivots are, where the reversal zones are based on the methodology we use, how you can find them, where to expect things. Like it's a very comprehensive tool. It'll tell you exactly, like if you ask it, break down this scenario, it'll show you and give you quizzes on it and teach you how to run that scenario. So if you want to learn how a failed breakdown trade works, it'll give you test questions on it and show you examples. It's really going to be awesome. So that is coming down the pipe as well. Considering the huge pullback yesterday, don't you feel the likelihood of down move is less than consolidation or a move up? Yeah, if you weren't on the stream, I said today should be a snapback rally up towards 685. I absolutely think that. That doesn't mean you can't get pullbacks that you can sell and make money on, though. I bought Boyle, UNG taking profits shortly. Did UNG go big overnight? I'm guessing. I didn't look. Um, yeah, gold's going nuts again. Silver, not following with gold, that's a red flag. Silver should be leading when silver starts to show weakness. Silver will be what brings down the metals complex, not gold. At the end of the metals complex, silver does, and if you haven't been in my rooms, if you have been in my rooms, you'll know that since April of 2024, when we entered the metals complex, there's the break of the pre-market high. I talked about this being a failed breakdown setup and pushing higher. They're getting ready to launch that. If you've been in my room for the last 2 years, I've talked specifically about silver and how at the end of the metals complex, silver goes straight vertical. It goes straight up. And when it does, it can do it for a long, long time. But when it ends nastily every time. So I personally have trimmed my position or exposure to metals down to 10%. I did it a few days ago. It doesn't matter to me that it's still going crazy because I still have money in it and I'm making money. But the risk has gotten high. And this is why I talk about emotion. Missing part of a move is okay. The easy part of the metals is over, in my opinion, because now you're trying to steal. Each move higher is good. I mean, like I said, I have some exposure to it, so that's a good thing. But I have very little exposure to it because I know that when it does break, people are going to say, "Oh, it went down 5 points. It went up 9 yesterday, so it's not a big deal." Oh, it went down 10 points. Well, it's been up 20 the last 2 days. It's not a big deal. Oh shit, the last 5 days it's gone down 15 points, and we're now 100 points down or whatever. That's how it goes. And so I told everybody what I did. I share all of my moves, but I took profit at almost 250% and 300% or so, or close to 300%, and like 100 something percent on my 401k. So I'm more than ecstatic about that. Like I said, we dumped our 401ks in there in April of 24. EK Wax was at 49 at the time. It is at 170. So April of this year will be 2 years, and we have tripled our 401ks, more than tripled our 401ks, almost quadrupled them. That's crazy. And technically, I understand bottom line wasn't tripled, but everything that we had in there was tripled. The bottom line, mine is more than doubled. My 401k is more than doubled over the last 2 years. And you can't get that in the S&P, or you couldn't have gotten that in the S&P. That's why I told everybody risk is rising in the S&P. It's time to move to metals. And now 2 years later, I'm saying the risk is rising in metals. Right now, it's time to move to cash, and possibly EEM will be where I go next. Expect a little bit of rejection up here, and then we should be able to get through, again, pushing toward that 682 to 683 level next. But right now, I think cash is a very valuable place to be. If you're piling into the metals now, you're too late. You're way, way, way too late. See, and that's the thing. Nobody knows, and it's not anybody's fault, but nobody knows where to look for value and understanding where the breakouts are coming from and what markets are getting ready to move. So what happens is that market that you should have been in 2 years ago, but you didn't know about, moves. And then now everybody's going gold, 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 gold. Well, yeah, everybody's saying that because it's too late. because we've already had the move. And now you guys pile in, the institutions take their profits, not you guys. That's unfair. I can't say you guys pile in. Now the retail market piles in, the institutions take their profit, and then the market tanks, and all the retail traders are wondering what the hell happened. They thought gold was the next big thing. It was 2 years ago. Now it's no longer the big thing. It's already been the big thing. Here's that squeeze I was talking about. So they ran a trap all the way down. They made it a slightly higher low than this one here, and then they took it higher. They are now pushing above this level. I still would expect a little rejection here. Maybe not. I mean, it's not like it's a huge level, but again, the next main level here, if I look across, is going to be 82.93 up to 93.34. How do you add an alarm to the algo? I just did it on screen, Will, if you didn't see. You just hit the three dots and then hit add alert for IWJ Pivot Point Pro. 1500 on ADD and IWM perking up. Feels like we just went from DEFCON 3 to DEFCON 2. Well, I think down is worse, right? DEFCON 1 is war. So maybe it's backing off and going back to DEFCON 3. Or are you saying it's getting set up for a big... I think it's getting set up for a rally, personally. And maybe, let me clarify, maybe not off of this level. It could certainly come up to these levels and go lower. So you could have 3 of 3, 4 of 3, 5 of 3, technically here, and then 4 up here, and then 5. You could definitely see a lower low. But if they take back this high from yesterday, 685 basically, they take back 685, that's a real big problem for the bears. The bears. We do have possible trend day parameters here, by the way, guys. They just broke the pre-market high, so we don't have them yet. But any back test of, you see the 8 in red, VWAP in black, and the 21 in blue, any back test of these area, this complete area, even a spike through and reversal and a new high, is a trend day. So now we're above the pre-market high. That is step 1 of a trend day. Step 2 is we pull back and back test. Step 3 is the back test shows that there's enough demand and wants price to push higher and there's enough demand off of these levels to push higher and take out this high, which causes squeezing, which generally causes the market to want to do this the rest of the day. Again, if we get to 685, that's a level that would be interesting to short. DEFCON 5 is bad? I thought in War Games, now correct me if I'm wrong, but I thought in War Games, I'm old, I know, Matthew Broderick, somehow he was able to do a lot with the Commodore 64. I thought that they got down to DEFCON 1 and they were going to launch the nukes. I thought that was the deal. I could be wrong. Maybe DEFCON 5 is, maybe you're right, DEFCON, I don't know. I'm going to Google it, though, because I know who has the answer. Google. Well, if you put in DEBCON, they're not going to tell you. DEFCON 1 is far worse than DEFCON 5, as the scale increases in severity from 5, normal peacetime, to 1, maximum readiness for nuclear war, meaning DEFCON 1 signifies imminent or ongoing large-scale conflict. Yeah, okay. So it is DEFCON 1. DEFCON 5 is peacetime. Now, DEBCON 5, that's different. DEBCON 5 is when you're out of Little Debbie's. Man. I mean, I like, obviously, if you've been following, I've lost some weight. I'm down 40 pounds, actually. I like to eat. But there are certain things that as you get to be an adult, I mean, a little Debbie to me is one of the most disgusting things I can put in my mouth. There, any of them. It doesn't matter. The Christmas trees, the King Dons, whatever. They're all gross. It's weird. As a kid, I could eat a whole box of them. Now I don't know that I could eat a half of one. Sweets aren't a huge. I mean, don't get me wrong. I'll eat sweets, brownies, and ice cream for sure. But that's not what gets me. I'd rather have a second helping of steak than dessert. That looks like 5 up from the lows. Potentially. I don't know. I mean, we are looking for a C wave. Don't get me wrong. So we are looking for 5 up. Let me see here. This structure here for a wave 1 off of the overnights, I don't love. A lot of overlap on this candle. It's a very short structure and it's not great. There's the squeeze, by the way. It's happening, sweetheart. Then you have a 1-2. It's not bad. It's not the worst. It's certainly not the worst structure I've ever seen. This pullback's a little deep, but it could be. Sometimes movies teach you some things. Yeah, sometimes they lie though. Sometimes they have it backwards too. Strong bull response, guys. Again, nothing matters until they get back over 6913, 6900 round number, so probably some issues there. We have already hit, oh no, not quite. We're almost to the first target, which is again 6298 roughly. Technically, I could say 6273 is the first target, but anywhere in this region here, I would expect a little resistance. If they blow through that, then they're very likely to test the upper echelon here. If you're wondering why we don't have a buy signal, we do. We do have a buy signal. It's right here in the pre-market. It actually nailed the low of the pre-market. Nailed it. Gave you the buy, told you to stay in a buy this whole time. It gave you one opportunity to sell here that didn't work out. So when that sell goes away, by the way, just so you guys know, we take the sell as soon as we see it, or the buy. If it goes away, that doesn't matter. It still counts as a trade. Obviously, we still put money out there. It's chronicled in our wins and losses. But it never materialized on the chart because the sell was not strong enough to stay active, if that makes sense. So without that sell, you're still in this buy from here. So it doesn't think the algorithm doesn't go, you know what, I should reaffirm the buy. It just says, we're in a buy. I told you to buy it way back there. Why didn't you listen? That's all. So until they get to a point where there's weakness again, there's going to be no sell signal and there's going to be no new buy signal because it issued a buy all the way back here at the very low of the day. And so far off of that, it has ripped 7 points. This is why failed breakdowns are so good to trade with futures. So I've been if you haven't been in the rooms and you haven't been in my calls, we've been talking a lot about failed breakdowns because they're extremely powerful trades and they can run for days, literally days. We broke down. So here was the low of the day yesterday, basically at the close. Overnight, they set the low. They broke down below it. This is your low. They got back above that level, right? So your entry with futures, this is why it's so important and so good. So they got back above it. They came back down and could not break the low. That tells you the supply here was not strong because they couldn't push to a new low. They came back to that price. This is your entry right here at 677.21. And if you have futures, you can put your stop right here below that low, enter here, and then as they move up, you don't get the theta crush and all of the nastiness that comes with options. You get to keep going, and then when they set a new failed breakdown, now I still have this entry all the way down here, and my stop, if I can get my thing to work, now I can move up to here, and now I have this move coming, and assuming they move through, my stop can move up to the next level. So futures allow you to stay in these trades so much longer and make so much more money, and you can trade the after hours trades with futures. if you understand the failed breakdown trade. It's a incredibly powerful trade, incredibly. There are failed breakouts as well, but they are not nearly as powerful in bull markets. So when you're in a bull market, failed breakdowns are incredibly powerful. When you're in a bear market, failed breakouts are incredibly powerful. We're in a bull market. This drop means nothing in the big scheme of things. They didn't break any major support. It's just a pullback. So we're still in a bull market looking for failed breakdowns. You got one overnight, the failed breakdown of this low right here. They went higher, came back through it, and made a lower low. Tells you they broke down or swept this low. That's a trap. They trapped all of the people who wanted to short. They trapped the longs. So the longs got long here. Then they trapped them and stopped them out. Then the longs got long. They tried to trap them again. The shorts tried to short again. And then the shorts get ripped. And everybody gets trapped and the market moves without you unless you know what you're looking for. If you know what you're looking for, you entered with the institutions and followed the move up. These are very important concepts to understand. $682.80, basically we have hit the target. That was the first hump right here. The next target is $682.98. The next target is $683.31. So they hit the target to the penny almost. Let's see what this high was. $682.78. So they went 2 cents above the target, and they're getting a little bit of resistance here. We'll see how much resistance. We may get a sell signal here. We'll give them one more try because they are getting up into a fairly key area of resistance. But again, we do have a trend day starting, and as long as they hold one of these levels and push back higher, we can see them continue on to 685, potentially higher. But again, the 1 day max and the call resistance stacked like this is going to be very hard for them to get through today. And that 69.13 level is huge for the bulls. So that's about 18 and 13 is 31 points higher from here, which lines up about with the 1 day max. That tells me the market makers think that that's a big level too, or the options players. You have to understand the market goes in phases. Those phases are 80% normal and 20% awkward. We're kind of in one of those 20% awkward moments where the market is jumpy. Volatility is good, but jumpy volatility is hard. Jumpy volatility is harder. What I mean by that is you get a lot of sells where the weakness happens, and then they're doing this kind of stuff. They're running a lot of traps, and most of the time we're good on those, but sometimes the market does them very sophisticated, and we get trapped a lot, and that just happens. It's just part of the game. So you just have to understand, just like if you watch sports and you watch, we'll talk about my guy, Reggie Miller, okay? If you don't know who he is, he's one of the best, I would have said before Steph Curry, the best three-point shooter ever. Yes, I know about Ray Allen and Larry Bird, guys. But tremendous three-point shooter. Well, Reggie may go 5 games where he doesn't, well, not where he doesn't make a three, that'd be silly, but where he shoots way below his average. And he might go 5 games where he goes 20 of 25 from three, makes 75%. All of that stuff evens out. The reason statistics are statistics is because it's the law of large numbers. It's a big sample size, not just a day, a month, or a week. It's a big sample size that allows you to see what happens more often than not. If you look at the market for a year, that's a good sample size, but not big enough when you consider the market's been around, 200 years? No, 100, 1900, so 120 years? Sorry, not 200. 1 out of 120 isn't that good. That's very small. But if you extrapolate your data over 120 years and say what happens more often than not, then you have a data set. Then you have a whole bunch of things you can look at and say what is the most probable thing to happen here. Again, probable doesn't mean factual, it just means probable. And probable doesn't mean that 60% means that 6 times out of 10 it's going to happen and 4 times it's not. And I mean, in the mathematics of it, I get it does. I'm saying that if you flip a coin 10 times, it's not, most of the time, it's not going to be 5 heads and 5 tails. You might get 7-3, you might get 6-4, you might get 8-1, you might get 10-0. I've seen that. I've literally seen on roulette the ball go black 17 times in a row. That seems like it shouldn't happen. And then you go, it's been 17 reds, the next, or blacks, it has to be red next time. No, it's still 50-50 next time, or 48-48, depending on how many greens you have. You know what I mean, though. It's still 50-50 each roll. So thinking that because something happened a lot of times in a row, it has to happen the opposite way is flawed thinking. Or the opposite way next, I should say, over a short sample size. But over a large sample size, all of that stuff evens out and plays out to where the law of large numbers takes over, and we have probabilities that work. That's how casinos are built. Again, you want to be the casino, not the gambler. Hopefully you guys don't mind all this rambling while we wait for trades to appear.
I love it.
Will's going to go use the bathroom. He said that'll trigger a trade. Probably. Right now, we will take another short because we have not locked in the trend day, and you certainly can see massive reversals on days like this where they spike it higher overnight or than the overnight high and then fail. That would be a failed breakout, and we are in a very, very short-term bear market, just a couple days. But in the big context, still a bull market, still looking for buyers at key levels, and so far we've seen them. But if we get a short, we'll take one more at 682 right now. Short term, we're a little overbought here, so we could see a little pullback if we can get a sell signal. The ES has given us a sell, but the NQ has not. So we're waiting on the NQ to jump on board. If and when it does, we'll get there. But we don't try to front run these signals. The reason I brought that up is because you'll see this a lot where one of the two wants to sell, but the other one says no, and then they never get to a sell, and you try to front run it and say, oh, well, ES has one, so NQ is coming along. No, that's not the case at all. In fact, I found that a lot of times we get one of the two hits a sell signal and then reverses because the other one's too strong. So right now, ES has a sell, NQ doesn't, and NQ is powering the market or holding the market up here and pushing ES back up. And if you tried to front run this, you'd get trapped. So, and now ES has lost its sell signal because of this move back higher. So don't try to front run these signals. They come for when they come for a reason. It's when it's most likely for the markets to move in the same direction for 7 to 10 ES points with potential. What that means is more often than not, when these parameters are met, we'll see a move of at least 7 to 10 ES points in one direction, which usually gives us a winning trade on our options. That's enough of a movement to give us a win. And then, they have potential to continue squeezing, to continue dropping, to continue the move. But what the algorithm is looking for first is a high likelihood of 7 to 10 ES points in one direction with the potential for 30, 50, whatever. So ES there now is given a back test of the 8 here. This is the, if you don't know what these are, by the way, sorry, these are exponential moving averages, the red and the blue, the 8 and the 21. The 8 is the momentum indicator. So as long as they're above that, momentum continues in that direction. When they start to get below that, momentum is weakening and going in the other direction. As long as the 8 is above the 21, the market is in a bullish stance. If the 8 is below the 21, and this is all relative to the time frame you're on, by the way, this is a 5-minute time frame. So we're talking short term. As long as the 8 is above the 21, bullish stance. If the 8 is below the 21, bearish stance. If the moving averages are above VWAP, which are split right now, bullish. If they're below VWAP, bearish. 8 is your momentum, 21 is your trend, and VWAP is average price. What I mean by momentum is trend is if they're above the 8, momentum is intact. If they're above the 21, trend is intact. And if they are above VWAP, then price is trading and being bought above the average price, which is bullish. If they are below VWAP, price is being traded below the average price, which is bearish. And that's average price weighted by volume. So VWAP stands for volume weighted average price. So if there's 100,000 units bought at $8 and 100,000 units bought at $10, the average volume price on that would be $9. But if there's 200,000 units bought at $8 and only 50,000 bought at $9, then price is going to be closer to $8 because there's a lot more units bought at 8 than 9. Any new high here constitutes a trend day, FYI. We have now backtested the 8. If they push price back over 62.81, that is a trend, and we do not trade trend days. Now, if, this is a huge if you like to be a little more aggressive, you can do one of two things. On a trend day, you can try to buy any dips off of the 21 or VWAP. So if they come all the way back to the 21, you can try to buy that dip if you'd like. I say don't trade on trend days. That is my rule. But I'm giving people who just can't help themselves a couple of higher quality options. The other thing you can look for is a failed breakdown. So they come back down below a level and then recapture it. And then the third thing you can look for if you want to try to get the top is look for a sell signal off of like the 1-day max call resistance zone, as that is the most likely place to see a stiff rejection. If you get a sell off of this zone and take it, there's trend day, by the way. If you get a sell off of this zone and take it, that wouldn't be the worst risk reward ever. Again, I don't trade now. I'm done trading. But those are some options for people who do want to trade. And I warned all the way back here when they started coming back down and then got back up, that this was a failed breakdown right here that should squeeze up to these levels. We are at those levels. So the next set of levels here, got above these two. So your next set of levels is going to be this. Basically, I'm going to call it, because there's a lot of chop through this area. Your next 684 is going to be your next level. It's your high volume level right here, this blue one, and it's also resistance. And then the high here at 684, 81 or so, 77 it looks like. 684.77 is your next one after that. So if you took a long down here because I told you that this was a downside trap and very likely to squeeze, then good job. And those are your next targets, and you should be taking profit, by the way. Because just like a failed breakdown occurs, failed breakouts occur too. So they got above this level, you should take profit, because what they can do is this and then fail breakdown. So you should always be taking profit level to level. And then once you get down to where you have, either 1 or 2 contracts in ES, or you have, maybe 2 or 3 option contracts if you're doing options, then you can just move your stops up. So for instance, my stop, if I had, if you took this failed breakdown overnight, right, you can move your stop up now to 678.94. And as they get above this next level, you can move that up to 680.36 on the SPY. Because what should be happening is, if they're going to continue the bull trend, is if they break down at all, they should be holding the support underneath of them. That continues the most immediate bullish trend. Any break of the first level of support can signify this. So we don't want to get caught with all of those points going away. So we move our stop up with the move, and when they get 2 levels higher, so they had to go above this level here and then above this level here before we moved our stop. So they got above this level, level 1, and then level 2 here. So we move our stop up to the lows here, 678.92, because that's the support level for this move. So we can move our stop up to below these, or if you want to move it a little higher, you can. If you're less aggressive, that's fine. If they go up and hit this high volume level, then you can move your stop up to just below this put support, and so on. And you just keep moving up, giving yourself a chance to catch the biggest move possible. So you want to catch, you can catch trout if you want to, or you can try to catch whales. And while you're catching whales, still catch a whole bunch of, tunas or marlins or something like that. Because, I have seen failed breakdowns like this is the low, and then you set your low and you let it go, and this can go for 200 points over, multiple days. Or, maybe you only, and I say only because the low on, let's go to the ES real quick. The low where you would have gotten in on the ES was this over so I can see. So when you got back in on the ES, you should have got in at 68.22, basically 68.23. You got in at 68.23. They're at 83 already right now. That's 50 points, right? That's 50 points up. And who knows how high they can go. So you could have caught a 40, 50 pointer here, or you could catch a 200 pointer possibly, just depending, right? So if you want to give yourself the best chance to catch whales, that's how you do it. You got to use futures for one thing, because options are just too volatile with the theta. And unless you're, you can go out a ways and swing trade them, but you don't know how high these are, how far these are going to go. So let me be clear. The only requirement for a failed breakdown is that it hits its next resistance level. So if this was resistance and this here's the low, and they break down, they get back above it, and then they do this, your entry is right here. The only requirement for this trade is that it hits here. After that, we'll see. But very often what it does is what you're seeing right now. It pulls back and then it does this and hits the next level, and it pulls back and does this and hits the next level, and so on. So the only requirement here is that it hits this level. So you got to take some profit here and then see if it keeps going, and you can take a little more profit here and then see if it keeps going until you get down to 1 or 2 contracts, and you let this run, and this can run hundreds of points. So that's why taking long-term options isn't great, because again, you either have to pay a lot of money up front to take a long-term option, or you get theta crushed while they're trying to work their way here, whereas futures hold their price. If you get in here and out here, you lost $0. If you get in here and out here on an option, you lost theta. So you're going to lose money. And that's the big difference. It's a huge difference. So you can trail your stops quite wide on ES and still make lots of money, where on futures, where on options you can't do it as much. It makes it very tight trading. So we do have a sell here, but again, trend day parameters are in place. So for me, it's not a sell, and they didn't get up into a level that I would have preferred. They came up short, so I still think they can push up into these levels. I would only want to be shorting potentially off of this call resistance 1-day max area if they get there. Does anybody, since we're in a trend day and we're not going to be, we didn't miss a signal, it was a trend day. The only place I said to take a signal was off the 1-day max. But I also didn't hear an alert. Maybe I did and ignored it. I don't know. I don't think I got an alert. But anyway. Or maybe it's on the close of the candle. We'll see. Maybe it doesn't give me the alert till the close of the candle. Oh, no, it's got an alert right here. See, the alert's 1. But it's not audible? Huh, interesting. Maybe you can make it audible. I don't use alerts, so I don't know. I'm very not skilled in this simultaneous volume. Oh, okay. I assume volume is. Oh no, this is what it's giving me. Okay, so I don't want that. Show buy sell buttons. Indicator values, indicator inputs, settings. Oh, interesting. Okay. As you can see, this sell is starting to fail because we're in a trend day. This back tested the 8 and pushed off of it. That's why you don't want to trade these things. Why no trading on trend days? I covered that earlier. Don't forget the Z. Welcome to the stream. The biggest reason is there's several. Okay, so first, if you have a trend day, you want to be on trend. You're not likely to get a lot of buy signals today. They would have to pull back quite far to get one, and it happens. But what happens most of the time is for you to get a buy signal on a trend day, they pull back so far that the trend is kind of failing, and now it's going to be a sell now, right? So the buy signals start to turn weak on trend days. Trend days, if they're going to stay trending the way they want to, are going to mostly be like this or like this, where they grind higher, pull back a little and then grind higher. They're not going to be clean, so they're hard to enter. You don't want to chase the trend because you can get failed trend days, and you don't want to chase reversals because you get the sell signal that you just got, so that's 1 failure. So now you're out of pocket 1 loss. They go up, they give you another 1 failure. That's 2 losses. They'll give you another 1, 3 losses, give you another 1, 4 losses, give you another 1, and then it breaks through. Well, even if this is a winning trade, to try to come back off these 4 losses, you're going to get, it's not worth it. So the odds are stacked against you to find a winning trade on trend days, as opposed to be stacked in your favor. And the example I give all the time, and I gave it earlier in this video, if you want to go back and watch a more detailed explanation, is if you walk into a poker room and one table has 4 pros sitting at it and one table has a bunch of drunk guys sitting at it, you want to sit with the drunk guys because that's your best chance to make money. You don't want to sit with pro traders who are going to take your money, or pro poker players who are going to crush you. So when you're trading on a trend day, it's like sitting with the pros, because it's really hard to find the moves, because there's so many fake outs and so many choppy moves and so many traps that they don't make it easy to trade. It's easy to trade when they are in the range or in the volatility zone, which is going to be the pre-market high to the pre-market low. And very often those zones are plenty wide enough to trade. And very often we get a day where they come up, they pull back, and then they give us the buy signal, and the buy signal does this, and they do trend, and we're down here at the buy signal, and we get a lot of the move up. That happens quite a bit. So when you're not in the volatility range or in the overnight range, it becomes very difficult to trade effectively. Now, the trades that I said would be the most effective would be trying to trade a bounce off of VWAP in the 21 down here. That would be effective because one, especially considering they're testing the back pre-market high that they broke out from, they're testing this high right here. There's a lot of support right there. So that's an aggressive trade to trade any touch of this. Another where I'd want to short is off of this 1-day max call resistance zone. That's the most likely place to face a tough, stiff rejection where you can get enough points to the downside to make money. So trend days just aren't favorable day trading days. Day trading is about reversals, whether anybody tells you this or not. You know, the failed breakdown, that's a reversal. That's a reversal pattern. Hitting support and bouncing, that's a reversal pattern. Hitting resistance and bouncing, that's a reversal pattern. These are what you want to trade. You want to be in somewhere around here. You don't want to be in up here. Up here is a failed spot to get in because you're too far along in the trend. You don't know if they're going to trend choppy. So they can do this the whole most of the rest of the day. They can go sideways here and then at the end of the day push up here. They can do that. Choppy trading sucks. You're looking for clean trading and good trading parameters, and it's what has resulted in us making $120,000 over the last 2 years on a $100,000 account. Trend day understanding is awesome. Saved me a lot of money. Yeah, I mean, you just get so caught up in the fact that you think the market's going to reverse because it's gone up too much. I mean, since 7:45, it's now almost 10:45. We're 15 minutes. So for about 3 hours, the market has done nothing but go higher. So you're in your head going, here we go. This reversal is going to happen. Now it's going to reverse. Now it's going to reverse. No, doesn't have to do any of that. That's why trend days are so frustrating because they can do a lot of different things, whereas normal trading days are much cleaner. Now the thing about trend days is they stack because very often trend days come after a major high or low. So we made a major low, or we made a low. It's not a major low yet. It'll be major if we take out 69.13 ES. We made a low. Now the bulls say, good job, we got it, okay? And then tomorrow you see this a lot, and then the next day you see this a lot, and then you see them start to consolidate and then trade normal. So if you actually look at the market, it trends about 10% of the time, and it's in range about 90% of the time. The problem is, though, trend days stack. So you'll have 3 or 4 or 5 or 6, sometimes 7 trend days in a row. We've seen a lot of them in January because the volatility has picked up. So when trend days stack, they start to frustrate you because you haven't traded in a week. Not trading for a week isn't a big deal. There are lots of times that it's not only not a big deal, it's the best option. And then you trade when you get to a spot that you like. And this is for day trading. Swing trading is different. If swing trading, you want to be on trend and going. Day trading, you're trying to fade tops and bottoms or highs and lows. So right now that sell failed. And I think 2 sells actually failed that I saw. So now you're in for 2 failed selling attempts if you tried to trade this trend day. And that's what I'm talking about. If you get another sell. So here's the other reason, specifically for my trading style. There are other trading styles that trend days might be good for. We're looking for reversals. The indicator is looking for reversals. And on normal days, you come into support and it holds. You go into resistance and it holds. On trend days, you go into support and it breaks, or you go into resistance and it breaks. But the indicator keeps thinking, it doesn't know, hey, we broke a resistance, so don't think about resistance anymore. It knows what it does. So what it does is it says, hey, this is resistance. We're seeing a little bit of rejection. This should be a sell. And then they break through. And it doesn't register to itself, resistances aren't holding today. So when resistances aren't holding and it's continuing to get you sell off of resistance, you're just getting smoked. So the indicator is built to find resistance or support, find high volume levels that are most likely to hold, and most of the time they do, and trade off of those levels. You know, it gave you a sell here. You can see on the volume indicator that this is a high volume level. It's the most traded level of the day. So it gave you a sell off of that level because there was weakness. That's a reasonable thing for an indicator to understand. What it doesn't understand, because it's not a human, is that this didn't hold. They're pushing above it now. They've closed candles above it. This closed above it. This closed above it. This closed above it. This closed above it. Next resistance, it's going to give you another sell because it says, hey, this is a high volume level. We're looking for weakness. We got weakness. Here's a sell signal for you. Not computing that the highest level of the day didn't hold resistance, so going into the next one makes it a little less likely. Hopefully that helped. Since we are in a trend day and trades are not going to be coming, unfortunately, Wednesdays have been rough for the last couple of months, guys. Holiday trading in December and lots of trend days and choppy trading in January. So it just hasn't been conducive trading environments. It happens as part of what we do, part of what we go through as traders. You have to understand that. If you don't, you'll get chopped up and beaten. If you do, you'll do very well. But because of that, and there's no trades coming, I will stay on for a few more minutes here and see if anybody has questions or wants to know more about anything I've gone over today, wants more in detailed explanation of something. I'm happy to answer any of those questions. If you even want to go to another chart, we can take a look within reason. I'm not going to do a million charts, but if you have a question about something, we can go to another chart if you want to do that as well. Give you guys a few minutes to put any questions in if you have them. If you don't, then we will call it here in a few minutes. Now, again, if you get a sell off of the one-day max level, that's a little different and an aggressive play, but one I wouldn't be mad if you entertained. Just know that level, I believe, is going to coincide with where we at. Let me see on ES what the one-day max is. Another important piece of information, that's a trend line right there, that big black line going up. They broke down, and now they've recovered it. As long as they stay recovered on that trend line, that's a big deal. The one-day max is under 6,900. It's at 6,898. They're almost there on the ES. But 69.13 you'll see is the level as we go over here. This is where they spiked up to. Nope, not that one. Sorry, further over. Where's it at? There it is. You can see the red line. That's the critical support level. All red lines are major support resistance. All blue lines are minor support resistance. But you can see that 69.13, they came up to it here, close to it here, failed, came up to it here, failed, came up to it here, failed, came up to it here, failed, lower low. Gonzo came back up, couldn't even get to it, got to 69.05, set a lower low, or higher, a lower high, and then came down and made a lower low, telling you that the supply in this area is strong, right? So that's where the supply is. They get back above that, all of that supply goes away, the squeeze happens, and up we go. So this is the level they got to get above. I don't think they're going to do it today, and most likely as we are heading into the one-day max. More often than not, that will hold. But again, there are hurricanes. If you weren't here for the explanation of that, go back and watch the beginning of the video. I explained how the one-day minimum and one-day max work and why. They're coming into those levels. It doesn't mean they can't get above them, right? So this is the one-day max, meaning at the end of the day, the market makers want price below this price. They want ES price below this level. So does that mean it has to stay below it all day? No, they can go up to 69.13 and then get back below that level. I would say it will be critical to watch this trend line again. If they stay above it and then back test this trend line and hold, and then break out over 69.13, that's all she wrote, in my opinion. I think we're going up and we're going up strong. Do you think the market is topped overall? No, I do think 7,000 SPX is an inevitable number. they just ran a trap here because everybody thought it was inevitable. And so when everybody's waiting for it, they don't get to it first. They pull back from it and then they come back to it. Um, so I think this is all just a big downside trap. I do think now that they've done this, I do think the price is more like 71 to 7,200 on the SPX because they got within 15 points of it and pulled away, which usually tells you that's not the number they were looking for. In other words, if they were looking for 7,000 as the top, they would have trapped it a different way. They would have got to it, and they wouldn't have come off of it immediately because too obvious. They would have got to it, they would have got through it, and then done this. Most likely in some sort of move like this, where they think that they're going to continue higher and then smack everybody down. And so when they run a different trap, when they run the short guy trap, right? So if they're coming to this trend line, let's say the trend line is the number. If they're coming to that trend line and they get there but don't hit it, and then they pull away from it, as long as they don't break major support, which they have not done on this pullback standard. As long as they don't break major support, if they start coming back up to this level, then the trend line's not the number. They're going to go past the trend line. So as long as they hold down here and come back up, this was not the level. And more often than not, that's the case when they come up short of a major target. So the major target here is 7,000. They came up 15 points short, pulled back, and now I think they'll likely push through to 7,100 or so. That'll be the trap, and then we'll see if we can get the rejection off of that. Dow 50K and SPX 7K seems like logical psychological level. It does, which is the problem. If it seems like it's logical to you, then it seems like it's logical to a million traders, and they don't want you to think it's logical. That's the thing. They want you, if you go look at 2022 on the SPX, I would think I was looking for either 4,900 or 5,000. I can't remember. I think it was 5,000. I think we got to 48 and change or something. 5,000 was too obvious. Now they didn't get within 15 points of 5,000. They got within 100 and whatever, 150, 170 points of it. So they didn't get close enough to say we're gonna get 5,000, and then they fell off strongly. 5,000 seemed logical to everyone at that time, so they didn't get to it. 7,000 seems logical now, so they'll blow through it, or they won't get. Maybe it was the top. I don't know yet because they haven't broken major support, but I still think 7,000 will get hit. All right, they've pushed through the one-day max here on the ES. Let's go back over to the SPY real quick. They're probably at the one-day max, I would guess. Very close, yeah. So they got a little bit of room on the SPY. Where's the NQ in relation to its one-day max? Probably just above it, I'm guessing. Still calculating. Okay, just below it. So there's still a little bit of upside room on these charts, not a lot. ES, a little above its one-day max. NQ and SPY have a little ways to go. What about RTY? RTY crushing today, by the way. Again, you don't, I talk about this in my room a lot. Since December when we had our last rate cut and the one before that, which I think was October, you don't want RTY leading in those instances. Rate cuts should be very beneficial to tech, and tech is your leaders and tech is your bubble. And if the best of the best aren't leading the market, that means that when the market fails, that the best of the best are already failing, and it's going to come down in a bad way. So the fact that RTY has been leading the charge on this way up, one, I've said for a while that RTY is going to make an all-time high before the top is in. So before we make an all-time a top that I agree with, I think RTY has to make an all-time high, and they came up just short. They're just above their one-day max as well. The RTY is leading though, and when we do in this run, that's very, very typical of late cycle bull markets where the RTY becomes the leader and plays catch up. And the risk gets heavy because RTY is risk on. And so the more risk that is in the market, the higher likelihood of a market to falter. Bubbles don't pop until leverage is out of control. Bubbles don't pop until risk is out of control. Bubbles don't pop until people are so over leveraged on the market that when it does pop, it causes meltdowns. It causes absolute liquidations. It causes bankruptcies. It causes people who are so over leveraged to lose their homes. This is no joke. This happens all the time. Bubbles don't pop until the psychology changes. So for the whole last year, everybody talked about the AI bubble. And then they kept crushing new highs. Then you had the April pullback, right? And after the April pullback, everybody said, okay, the top's in. Well, then they went back and made another new high, and they're getting close to 7,000. And now the psychology is starting to change. And the change is to when bubbles start to get in the danger zone. That danger zone is we had a scare, a big one. You know, the April pullback was a substantial pullback. We had a scare. The market recovered. It went back up. This is the new normal. This is life. This is the market. It won't go down. It just is going to pull back 5% and go higher every time. Buy the dip, guys. Buy the dip, guys. Buy the dip, guys. When that's the mentality that changes after bubble talk. So you had, you have your run up, and your run up is buy the dip. That's fine. Off of a low, you're saying, hey, buy the dip, buy the dip. And then you get up here somewhere and they say, oh, we're in a bubble. And then you get a big pullback and everybody says, oh, the bubble's bursting. And then it doesn't. When you come back up here and you're at these nosebleeds again and people shift from we're in a bubble to we're in the normal, that's when bubbles burst. That's when because now they say you can't lose in this market. Let's get in. Let's get in heavier. Let's mortgage the house. Let's put our savings into this NVIDIA. Let's do whatever it is to put ourselves in a really awkward spot. And if the market does do what they said it was going to do a while ago, we're effed bad. Bad. But it can't do that. It can only pull back this far and then it's going to be fine again. Well, it can, and it will. But it won't do it until the psychology changes again. The psychology's got to shift back to we're not in a bubble, and this is just what the market does. And that's when it does what it's going to do. For instance, in 2022, everybody was talking about 5,000, that the market was unstoppable. We were never going to pull back. You couldn't see a pullback. It was impossible. Blah, 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 blah. Market crashes all the way down to 3,500. When it hits 3,500, we get, I said it would go to 4,300 minimum or 4,200, whatever it was, whatever the target I had was. I was laughed at. I was told that this was, the market was dead. We were going down to 1,000. The ES was over, blah, 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 blah. We got the worst reading on CPI in 7 decades, and the market went from 3,500 to 7,000 over that, since that time. That's when the psychology changed to the downside. Everybody said, we're going to 1,000. This is it. This is the new normal. We're in a bear market, blah, blah, blah. No, we hit support. We're going up. So when the psychology changes again, and the bubble talk is dying, by the way, you aren't seeing anybody talk about bubbles anymore, as much anymore. They're all saying, see, earnings are good. Earnings are good. Earnings are good. Well, are they? Netflix just had earnings. They're down 3.5%. I don't even know what their earnings were, honestly. I don't know if they did good or bad, but Netflix we had a target of 87. They're at 84 now in that secondary support zone. So we'll see if they can hold that. But psychology's got to change before, and leverage has to get a little higher before you get a top. The voice of reason. Well, I think the biggest thing you have to understand is so many people want, let's go look at, we're at 69.05, guys. We're approaching a really key level here. 69.13 coming up is going to be make or break for this. Man, this is such a great run up off this low, off this failed breakdown right here. This is such a great run up. You are up 83 points right now. This is, what was I saying? Dang it. Oh, the voice of reason. So this is what happens in the markets, right? You get a 2% pullback and everybody loses their mind. The key factor that you have to remember is that when this market and bubble do break, it's going to be worse than people think. People don't think we can cut the market in half. I think we're going to way more than cut the market in half. I think the initial move might cut the market in half. They don't think that that's possible. I can show you, not only is it possible, it's happened through history on a million things. And and they also see pie in the sky, and they say, well, if it is possible, I need to get in right at the top so I can capture 3,500 points of downside. Good luck with that. We wait till support breaks. When support breaks, we will be on board with the market dropping. Now, the first support that needs to break, the upper support that to even get the ball rolling, is the November lows, down around, I think they're at 6,600 or so. That has to break. And then for confirmation, you really want to see the April lows break. And that's all the way down, I think, at 5,000. But if you're trying to catch the top, you're just going to get lit up over and over again. There's still plenty of room at 5,000 to go down to 3,500. That's still 1,500 points of downside. That's plenty. And then you're going to get a pretty strong rally, and then you're going to get another chance to really try to catch the top. Because then once you have a setup and a pattern and something to do, because what's going to happen, in my opinion, this is an opinion, everybody's allowed to have them. So if you have a different one, that's cool. No worries. I'm not going to sit here and tell you mine's 100% right, because nobody knows for sure. But you're going to see the market move down, and then you're going to get this setup here. And then you have the chance to catch all of the points, because that's when the C wave happens, and that's when all hell's going to break loose, in my opinion. But these two things right here, this A and B up, that's going to take the better part of a decade or more. Still ripping here, 69.06. The opening comments I had today were this was going to be a very strong bull snapback day. Just based on this failed breakdown, the structure, the overall selling the last 2 days, just kind of where we were at in general. We are seeing that now. Whether that snapback ends at 69.13 up here or not, to be determined. But that should be where we see some sort of rejection. Now, if you are looking for a swing entry, and we may take this in my room, if they get through 69.13, pull back and then come back to 69.13, that should be a squeeze zone. That should be a squeeze zone where you start to see the market accelerate even more than it already has. So I would expect a rejection off of 69.13, and probably a handsome rejection. I use the word handsome. I ain't scared. Probably a decent rejection. Maybe back to the trend line here, around 68.93, that would be perfect. And then back like this, that's an incredible entry for that. And that's where I would look for a swing entry, personally. The first swing opportunity was here in the after hours on ES. The second one is on the recovery of 69.13. The problem you have is, because the market is full of such jerks, if you're trying to do it in options as opposed to futures, you may get this today, and then by the time the market opens tomorrow, we could be here. I don't know. That's just a hypothesis. If you want my honest opinion, I do think the market is a house of cards right now. You have a few different things going on that are detrimental to markets. The banking industry is very much in trouble, in my opinion. But you have to remember, in 2008, the banking industry crashed, obviously, right, for home loans and stuff, for the stacking the Class A loans with the subprime loans, and then having all those go out and all the houses go under, and everything happened there. But that was known. I think Michael Burry found it in 2006 or 2005, somewhere around there. And it took 2 years before that played out through the market, before the market felt the reverberation of what happened. I remember, even when those things started to fail, housing started to fail, it still didn't play out for like another year. I mean, there's a famous scene of him hiding under his desk because the people are all wondering why their money is tied up in these weird things that he created that nobody had created before, to short the housing industry. And it took a long time for that to play out and a lot of stress. And so I think the banking industry has severe cracks in its foundation for several reasons, that I've highlighted on many videos and shorts and reels. Um, and it just takes time for that to filter through the banking industry. And that is really what's going to, in my opinion, lead the market to the downside. Tech is already starting to the downside. NASDAQ has been weak. Uh, Netflix is low at 83 off of, way down off of its highs. Meta has been down for quite a while. Microsoft struggling. That doesn't mean we can't see recovery, and even some of them make new all-time highs. Some of the Mag 7, but you're already seeing weakness in tech. But the banking industry is holding up the market, in my opinion. Once the banking problems reverberate through the market, that will be the shock nobody's looking for. Because every quarter, the banks come out and say, look at our bottom line, it's amazing. What they don't tell you is they no longer have to report their delinquent mortgage loans. They no longer have to report their shadow lending numbers. They aren't being forthcoming about their stress tests in public. The Fed says, oh, we stress test the banks, they're great. And both Bank of America and JP Morgan said, I wouldn't say great. I wouldn't say great. Commercial loans, lots of problems there. Car loans, lots of problems there. Credit cards, lots of problems there. There is a lot of money being hidden, that's on their balance sheets. And that will all come to a head soon. It'll come to a head in the economy. It'll come to a head in the banks, and then it'll come to head in the market. And the consumer is about to dry up. The consumers are leveraged and over extended. So there are a lot of issues in the market that people aren't talking about or don't seem to care about. And that's okay. That's how it was in 2008 as well. And that's how it was, during COVID. Before COVID was even a thing, I was talking about how extended the market was and how we were due for a very stiff correction. And that's, when we got the COVID drop. And then all of a sudden it was because of COVID. And I was like, well, I mean, COVID was the catalyst. I'll give you that. But it certainly wasn't because of COVID. It was because the market was setting up for that move. And I think we're setting up for something that will be as strong as COVID, but in a different way and way, 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 way longer. All right, guys, with no signs of weakness in the market, and not trading anymore today, and you guys haven't put any questions through. Well, there's one right there, and then we'll be done after I answer this one. When the market goes, what happens to bond funds? Well, typically bonds are where people run to safety. I'm not so sure that's going to be the case here, but typically they would go up. I'm not sure there's going to be a safe haven though, because there's going to be a lot more problems with the safety of bonds with the lending issues that are going on in other places. But we'll see. I'm not confident in bonds being a safe haven this time, but they certainly have been in the past. But typically, as bonds start to rise, that is a warning sign for the market as well. I think, honestly, I think that very soon, and that's why I'm down to very lightly in. cash is going to be the best place to be. For a while, and then there's going to be incredible buying opportunities coming that people with patience will get. Could you look at PSTG for me? It seems to be recapturing breakdown area. Yeah, we can look at one real quick. Yes, has a cell below 6913. If we get a cell just below 6913, if we get a cell, do you take it or wait for a setup? Does it have a cell? Do I not have something on here? Oh, you're saying ES itself. I see the cell signal on ES. Yeah, that's up to you. I personally would be looking for a tag of 6913, but also, they're above the 1 day max. So that tweener, I prefer it to come off of a clean level if I'm going to take a outside the rules play. 6913 would be where I'd be looking for them. But, well, let me look. The clean level could be that shorter, this one here. Yeah. I think I'd wait for 6913. I like better setups. I think that's the better setup, but that's it. PTSG. You think it's a failed breakdown on what time frame? Heck. And which are you talking about? Touchstone Sands Capital Growth Fund? Precision Sugami China Corp. Pure Storage. Did I type in the wrong thing? PSTG. I typed it wrong. That's why. Dyslexia. Yeah, so you have a solid entry right here. The entry would have been 71, 79. Now you got to remember, it's basically fulfilled its requirement. So the failed breakdown was of this level. We'll do a quick lesson. So here's your level, right? I set a low. Why didn't it draw a line? I set a low here. And this is what you're looking for. So they set a low, they sweep, okay? And they break the low. That's what you want to see first. Then you want to see them get back to or above. They got above here. Technically, you could have entered right here at 71.81 because this is your low. This is where your stop has to go, is down here. The technical place was here to enter. They gave you a little bit of a run up to the next resistance. So that one fulfilled actually right there. So here's your next resistance level. Oh my gosh, can I not? How do you beat this? Okay, so here's your next resistance level. So they gave you a pullback. When they came back to it, they had to fulfill this level. They did. Okay. Then they got below it again. So they got below it, came back up above it. You could have entered again here. Again, your stop's got to go down here below this. They held that low because they're going to run a million traps off of that. There's a lot of traps. But the idea is this low is solid. And it's what, 2 points down? So that's about right. And then when they hit here, here's your next entry. They fulfilled again the target. And then the next target was here, was the little shelf on the daily that they had to get through. So if we look at this level, very similar to the ES. Okay, if we look at this level, they came up to it and above it, came back down below it, and then your next entry could have been right there at 72.61. You could have added or entered if you hadn't entered already. Their next target higher would have been here. They got close. They didn't quite get there. So they could have some upside here still. But remember the only fulfillment requirement is the first resistance zone, so you should always take a decent amount of your profit there, at least half, if not more. That's up to you though. And then what you're looking for is what we saw today. So failed breakdowns, depending on the chart, can range from this chart, I would say like 2 to 20 points maybe. On the ES, they can range from like 6 to 500 points. We've seen 300, 400 point moves straight up before. So all you're doing is playing level to level at that point. So they hit the target here, stopped you out probably on the way down, or should have stopped you out because this is deep. You could have re-entered with your stop down here. And when I mean, so when you take profit here, you can move your stop up to the last lows. But then when you re-enter, you're still taking the low of the structure. Does that make sense? So you don't want your low, although your stop all the way down here once you've taken profit. Unless you're super aggressive, I guess you can do that. But you're looking for continuation, and they should be able to hold support continuation. There were several entries on this failed breakdown. They swept it a couple times, but they never took out this low, which told you that they were always going to accept price when it got back to here. So they accepted it here, went up, hit the thing, came back, accepted it here, hit the target, came back down, ran a trap. This was a trap. And then they squeezed, got in here, they hit the target, hit the next target, squeezed again. Now you can see the upsides pushing here. Actually, this shelf right here. So they did fill that one too. So this one's still climbing. I would move, if you got long at the right place, you could move your stop up to here now because you have all this support above you. And they should hold this line if they're going to continue higher. But yeah, this has several failed breakdowns on it. Hopefully that helped. All right, guys, we'll go ahead and call it here. Good luck if you take any trades today. Again, I don't trade trend days once they're confirmed. It's a much better outcome, in my opinion, to not trade them than it is to take a few trades on them. When we do get that low of lows, COVID style low, would you be making recommendations of various recommended stocks to get long? Would be appreciated in our group, by the way. Yeah, I mean, I think for all of them, you're looking for a major low to hold. For those kind of trades, you're looking for these types of setups where you got a broken low. If I go back here, there's probably some different stuff to look at. Okay, so so there's another low here that they swept. So the technical, okay, so that makes it even better on this one. But you're looking for this kind of thing where they come down to a major low, they break it, they came back up above the low here, came back down below it. So your entry actually was here at 70.51, and they fulfilled the next resistance zone at 71.79, and then the next one after that at 72.44. And then they came down, still couldn't make a lower low. So your entry could have been a lot lower here with your stop down here, and you could have done a lot better in this trade. Now that I've zoomed out a little more, I can see where the actual low that broke was broken. So that is my fault for not zooming out. Hopefully he's still on. This is the low that broke. They broke down through it, got back up above it on this spike here, came back down below it. And then when they got back to it right here, you could have entered with this being your stop below this low. They ran a little trap of it and then zoomed it again, pulled back, held again, and then continued on. So yeah, that was my fault. This low was the low that they really swept. I was looking at this low, but this low qualified as well. This one, once they got to it, same concept up here, went to the next level. So each low is always the same concept. But yeah, Joe, when that happens, there'll be a lot of explanation and ideas and places to get in. The biggest reason I said cash is now is that I'm looking at a bigger picture deal where, could I be invested in the S&P and maybe get another 3 or 4%, or maybe even 5 or 6% higher? Yes. Is it worth the risk of downside? In my opinion, no. I'm willing to give up any short side rally to look for a downside correction that will give me a much, much better buying opportunity where I can get in at, and double the amount of shares in the investment fund that I put my money in, so that I only got to go half the way up to um, get those gains back that I could have had. That makes sense. Whereas anybody who just stays in, uh, when they go all the way down that far, they got to go all the way back up to get all their money back. I don't. So I'm willing to give up a few percent here and there to the upside to get a double digit buying opportunity to the downside. All right, now we will call it there. Let's go back to the ES. We'll make one last look and see what happened. There's the sell. Again, I would have personally waited for 13, but I would be looking. They're holding the 8 still until they get below the 8. If they get below the 8, the trend line. If they get below the trend line, then there's some other support as well. But 68.90 is a good level. They got to break through 68.96, then they should be able to get down to 68.90. And that should be a good level to take some profit because you're going to be hitting the trend line and a major support. The reds are getting major support. And then below that, you got the 21 here at 68.84. So there's some downside potential here. Good luck, everybody. We'll be back next Wednesday. Hopefully the market starts to even out a little bit and give us better trading days. The last couple of months have been a little wonky in that way, where there's not been a lot of trades because of the trends. But overall, be careful today. Don't overtrade, and we'll be back next week. Thank you, everybody, for joining. We'll do it again next week.